Good morning, everybody. This is the live market open for May 5th. It's a Thursday. Hope everybody's doing well. I'm Yohay, Elam, Forex Crunch and Market Movers podcasting. The show, as usual, for FX Street. As always, we'll cover recent developments in markets. Yesterday was quite a busy day. Talk about various charts and levels, and discuss the next 24 hours. As always, your questions are welcome at tlk.io/fxstreet-forex-live-video. Just in case you cannot see the chat alongside the screen. So good morning to Adinda, Horace, BYL, and Ed. So in terms of the market mood, mixed US data means a mixed mood, but in general, it's a bit more dollar positive than dollar negative. We'll talk about the details later on. The US dollar remains relatively solid. Okay, so the picture hasn't changed materially. We had, let's talk about the data here. So the beginning of yesterday's big bulk of releases, we had ADP non-farm payrolls miss with 156,000, much lower than 196,000. Bad sign for the non-farm payrolls, but this didn't last too long. We had the ISM non-manufacturing PMI beating with 55.7, and also the employment component looked healthy, so all in all, expectations for the non-farm payrolls are quite stable. Good morning, Luca, as well. And we had the trade balance also coming out better than expected, with a deficit of around 40 billion US dollars, a bit better than predicted, and labor costs also beat expectations with 4.1. But with the beaten labor cost, we had a drop in productivity. Anyway, these are not top-tier figures. What we need to know for the non-farm payrolls is that ADP was a miss, and ISM non-manufacturing PMI was a beat, and this beat trumped the miss. Talking about Trump, yesterday was finalized. The last standing Republican candidate, John Kasich, also suspended his campaign, retired after Ted Cruz did so. That leaves Trump the only man standing. So it's going to be Trump against most probably Hillary Clinton. The primaries still go on against Sanders in the Democratic camp, but it's basically a very clear choice between mainstream Clinton and disruptive Trump. Okay, might talk about that later on. So there is speculation about what could a Trump presidency be and what are the chances and things like that. Other figures we had yesterday: UK construction PMI missed with 52 points. It sort of continued weighing on the pound that was already, not looking that great. We'll reach the charts very soon. Eurozone retail sales missed with a drop of 0.5. In oil, we had a mixed picture as well. So oil inventories once again showed a rise in inventories, but on the other hand, we have less production predicted from Canada due to fires there in Alberta. So it's a bit of a mix. Australian data, I didn't mention here, but that looks quite positive, with beats in retail sales and the trade balance, and the Australian dollar ignores weak Chinese services PMI. Okay. Anyway, let's look at the charts and explain things on the chart. So let's begin with euro dollar. Well, now it opens the morning in a negative tone. As I said, the US dollar has the upper hand, slightly better hand. So we did see a move to the upside yesterday with euro dollar. Some weaker dollar on the back of the weak ADP non-farm payrolls, but all in all, we're back under 115 this morning. Euro dollar has a hard time moving above 115. The high for this morning is 114.93, the low 114.74. 114.60 works as support. Same picture here in pound dollar. Remaining depressed after the big fall from glory. Okay, so just around 145. We found support there, well, above support at 144.60. Support, I see it's still at 144.40. Okay, so the pound did manage to bounce a bit back up. Currently, it looks like a dead cat bounce. Okay. Dollar yen. Here we did have a bigger move to the downside. That means a more significant weakening of the yen. Did not reach 106.10, which was the previous low. Just came a bit above at 106.30. Now it's settling around, or still battling the 107 line. Remember 107.65. I mentioned this line because it did provide support to dollar yen when the pair was trading on higher ground. So we're clearly off the lows in dollar yen, but it's still unclear what's going on in markets because we might have an intervention of the Bank of Japan. I think the intervention could be closer because now we did find some stability. As I mentioned in previous shows, there's a better chance of the Bank of Japan intervening when it goes with the trend after dollar yen stabilizes or even begins moving to the upside. It's much harder trying to change the trend or trying to catch a falling knife. Okay, so here we are, 107.65, 106.10 are the levels I'm looking at. Dollar CAD, quite a big jump. The figures in the Canadian, well, regarding the oil inventories hurt the Canadian dollar more than other currencies. In addition, Canadian trade balance came out worse than expected. Very different than the U.S. trade balance. So we have a significantly weaker Canadian dollar. 129.30 is resistance. We're not there yet. 128.30 used to be support. Anyway, very strong support at 107.15. First attempt to break above this line failed, but now and you can see it's a clear separator of ranges. But then we had all the momentum going for dollar CAD. Stronger US dollar, weak Canadian data, not so convincing oil inventories, and we're moving to the upside. Okay, Australian dollar. Here we did have, this week we had the rate cut by the RBA. That sent the Australian dollar down, but tonight we had positive trade balance, positive retail sales, and we had a bounce from the lows from 74.40, which is support. We're making another attempt to recapture 75. Okay, and Kiwi dollar. Nothing really significant happened there in the last 24 hours. The screen doesn't refresh. Let me try to refresh it this way. Anyway, in the meantime, I'm seeing a few questions. The wild card Clinton wins, divorces, Hubley marries Trump, and it all ends well. Trump, the first lady. Yeah, you can never rule out any scenario in US politics after we're seeing Trump as the presumptive Republican nominee. Seems like not even Obama managed to swing polls. The Brexit still a coin flip. Yeah, let's look at this opinion poll you shared. Yeah, Referendum, according to this magazine, The Week. 50-50% split. Yeah, things are unclear. I think there's a small, according to other polls, a small advantage for the Remain campaign, but too many people are undecided, so it's still a wild card as well. China, where Trump might win, so would they hedge that? It's still a far way off. It's still 6 months until the elections. Trade agreements need to be ratified by Congress. So even if Trump wins, which I hope he will not, and even if and the polls show that he will lose against Clinton, at least for now, but anything can happen, as I said. And even if he gets into the White House, he might not have a majority in the U.S. Congress. And even if he does, his fellow Republicans don't like him at all, as we all know. So I'm not sure that we'll have really a big change in trade. Of course, the worries, the speculation can make a difference, but the actual what really happens in terms of trade is anyone's guess. Also, we don't know if things he says on the campaign trail are things he'll actually do as a president and actually manage to pass through Congress. Okay, so it's really, we have now 6 months of huge speculation. Every opinion poll is going to matter. If you already opened that topic, I would say that in terms of it's a very clear choice for Americans. I mean, and for markets. We all know Hillary Clinton. She's been First Lady, Senator of New York, Secretary of State, always in the public eye. She worked closely with Obama. We know Obama. it's basically continuation. It's Clinton continuation. It's lots of certainty, nothing to rock the boat. Okay, there might be changes on specific topics, women's rights, but for markets, it's not such a, it's more of the same. Trump is a wild card. You never know what he means, what he says. You don't know what he's going to be able to do. That's certainly a disruption. My view is that if we have higher chances of Clinton winning the presidency, it's going to mean that the Fed can continue on its very, very slow and gradual path of raising rates, and it's in general positive for the dollar, especially against the safe haven yen. But if there are growing chances that Trump wins, there's lots of uncertainty. He might be an excellent president, he might be a terrible one, but we don't know. Okay, and currently there are fears he'll be terrible, and for good reasons. So that could sort of create more uncertainty, less investment, lower chances of another rate hike coming anytime soon, a weaker US dollar, especially against the safe haven yen, perhaps also weaker against the euro, but perhaps a stronger US dollar against commodity currencies. Markets don't like uncertainty. Okay, let's go back to the charts, or maybe we have more questions and we'll get back to the charts. May mean that more pain for cable coming. Yeah, uncertainty about the Brexit means more pain, of course, because markets want certainty also on that front. Okay. Different pair of hands than the Scots. Yeah, it's more significant. Euro dollar dropped since 116.05. Yeah, we've seen a big dollar comeback this week. All right. I mean, we had it fall to lower levels. It was on Tuesday, turnaround Tuesday. We had it fall to very low levels, and then against the euro, for example, which you mentioned the euro, currently 114.72. Okay, scratching the lows. Another round of dollar buying. We had this surge here to 116.16, and then a turnaround, not only against the euro, but across the board. Next support is 114.60. Okay. Putin been quiet about Trump. Yeah. Well, Trump is a fan of Putin, so why would Putin complain? If Clinton gets in, expect a huge backlash from ISIS. Well, I'm not sure their foreign policies would be very different. I'm sure there's some red Indians that would love to scalp Trump before he wins if he does. Yeah. Trump made many people quite angry all over the world, and also in the United States. Ban on Muslims, Mexicans are rapists. Is talk about women. Anyway. Okay, back to Forex. The dollar index bounces from major support. Now watch the wedge. Inflation and labor costs seem to be lifting up. Anything? Yeah. Okay, let's share this chart also with everybody. Thanks, Luca. So here we are. Yeah, so what we're showing us is dollar trending down, but bouncing off the low end of the range. Okay. Let's see if we can break to higher ground. This is a daily chart, right? Anyway, King dollar back in the seat. Yeah, we would need a strong non-farm payrolls on Friday. Actually, today is a more quiet day. Okay, so thanks for this chart. I think the next move, of course, depends on the non-farm payrolls, but expectations are clearly higher. Okay, so thanks, Luca. The data I've showed earlier. Yeah, labor costs is in theory a sign of inflation, but that's for Q1. Now we get the non-farm payrolls for April, which is already in the second quarter. Expectations still remain high for gain of jobs of around 200,000. We'll do a full preview tomorrow. But in any case, with the ISM non-manufacturing PMI, remember that the Fed needs to see, of course, the ongoing rise in jobs, but also it needs to see inflation, and preferably wage inflation, that people have more money in their pockets rather than just oil prices going up or something like that. They have two mandates, inflation and employment. They sort of unofficially added another mandate, which is the financial conditions. Of course, their critics say that they work for Wall Street, and they say, well, we need the wealth effect. If people feel that they have more money in their pockets because of rising stocks and rising home prices, they will spend more and support the economy, and then we can raise rates. Yeah, today is a relatively more quiet day in terms of indicators. We do have jobless claims, but all the important hints are already out. ADP, the ISM PMIs, manufacturing and non-manufacturing. Okay. Well, let's already talk about the events for today, and then talk about more currency charts that I didn't cover. So at 8:30 GMT, we have the UK services PMI. That's also in the UK, as in the United States, it's the biggest sector. Okay, so we have expectations here standing on, well, more of the same from 53.7 to 53.5. The other two PMIs, the other two purchasing managers indices, disappointed with 53 point, well, manufacturing and construction. Will services be better? That's more significant. As always, with UK releases, you can expect lots of action towards the release on some rumors, leaks, you name it, okay? Well, now we're seeing a pound dollar falling, but the more significant action is just around the actual release, all right? And then in reaction to the actual data, but remember, the reaction can be wild, even violent, but it's usually short-lived with the pound, okay? Next event on the agenda, US jobless claims at 12:30 GMT. As usual on every Thursday. Recent figures have been quite good. I mean, very low, which is, of course, good news. So this time we're expecting a small rise from 257 to 260. This does not really provide a real hint about this non-farm payrolls, perhaps the next one, but nevertheless, it's sort of another indicator of the job market and will be watched, okay? And at 3:30 GMT, we have James Bullard, the president of the St. Louis Fed, speaking up. He's a known bull, hawk, optimistic guy. So, yeah, we're expecting him to be optimistic and leave the door open for a rate hike in June. If Bullard says something very dovish, no chance for a rate hike, which I think is realistic, but he won't say that. If he does say that that could weigh on the US dollar, that could give us perhaps a hint that the non-farm payrolls report this week, but probably he'll remain optimistic. But so if a hawk goes dovish, that's a sign, okay? And last but not least, well, later tonight we have a quarterly report from the Reserve Bank of Australia. Let's see. Well, they did cut rates. So what else can they add? First of all, they can give a broader view of the Australian economy. Again, it's China on one hand that is slowing down, and the Australian domestic economy outside the mining sector that is doing better. More news that came out just an hour ago from Australia is that they decided to appoint Philip Lowe as the new governor of the RBA because Glenn Stevens is finishing his term in September. So that's very good for markets because Lowe, spelled Lowe, will of course want the Australian dollar to go to new lows, but he's a continuation candidate, okay? He's been with the RBA for a long time. People know his opinions. He's aligned with Stevens. No surprises, someone very capable. So that's sort of not rocking the boat in terms of central banking in Australia. Now I see here a few questions, quite a few. Silver ratio, Ed says silver ratio against gold is around 80% ratio compared to historical 14%. So have we very cheap silver priced over paper gold? I must say I don't follow gold and silver quite closely. We did hear from James Gundlach of the, which is sort of the new bond king, telling us to buy gold because central banks will print more money and this money will go to a speculative asset like gold. I don't know. We can look at the chart of gold, but I don't have a clear opinion on that. To raise rates, false inflation. Yeah, they would like to see not really strong inflation, but at least prices going up, at least people having more money in their pockets and spending it. Okay, Goldman Sachs Bank refuses me an account as I didn't have one. 10 million US dollars now you can open just for $1 and get 1.05% interest. GS needs liquidity as they have exposure over 500% of derivatives. Can't see Goldman Sachs opening a branch in Harlem, so I offer. I'm not familiar with the Goldman Sachs story, but I don't think they have a problem with liquidity or cash in general. Of course, they are exposed, but in general, the big US banks, as they have become so huge, I think they're still too big to fail anyway. So I don't think they're. I mean, just by their sheer size, they seem safe to me. Luca asks Euro Pound on my watch list. Short retest broken till around 80. Okay, let's look at the chart you're sharing with us. I have to move back from. Yeah. Okay. Okay, that's a nice chart. So we're showing us that we had a nice uptrend here. Well, this is the 8120 line, if I'm not mistaken, right? Then we had a fall to support here at 7740, a line I'm also watching quite closely. And now we're having it move back up. So yeah, around 80. Yeah, 80, of course, is a very round number. It's 125 if we look at it at pound yen. Yeah, I'm looking at other lines. In general, for euro pound, I think the pound will be weighted to the downside ahead of the UK referendum, and the euro is more stable. And we have 6 weeks to go, I think, until the referendum, and that's when the pound, assuming we don't have a Brexit, can make a comeback. Actually, didn't complete the going on. I'll show you my euro pound chart, and we'll talk about other charts as well. Yeah. So yeah, I was looking at the 79.30 level because it worked very nicely as a separator of ranges. Okay. And now we're seeing it as a bit more mixed, this line, falling a bit to the downside. Yeah, so 81.20 and 77.40 are clearer lines. Currently, we're moving a bit higher. My tendency, my bias is a bit more to the upside on this cross because of fundamentals, but yeah, Forex is never a one-way street. We've seen the past few weeks until the recent moves, until the recent week, we've seen the pound make a big comeback. Anyway, more lines that I'm watching here. Yeah, 79.30, 78.30, and 77.40. On the top side, 80.20 and yeah, 81.20. Okay, let's talk about other currency pairs. We didn't actually skip the Kiwi. So very impressive double top here on Kiwi dollar. 70.50 is the double top. We've since fallen back down. The employment report was more or less positive. A big rise in employment and participation. Wages are higher. But yeah, milk prices did fall and the US dollar did strengthen. Under 70 once again, 68.20 is a support. This morning we're a bit higher. Perhaps the Kiwi enjoying some backwind, some help from the Australian dollar, which is on the rise. Okay, so it's 68.20 is support and 69.50 is the next level of resistance. Dollar Swiss, well, the US dollar is stronger, and this is reflected on against the Swiss franc as well. 95.87 is the current level. I would say support is still here at 95.50, resistance at 96.40. Okay, Euro Swiss very stable. Very narrow range of 15 pips around 110. We talked about Euro Pound, Euro Yen, relatively stable as well, around 123. This used to be a line of support. Now it's just a battle line. Anyway, 121 121.65 worked more or less here as a double bottom. I would say 124.20 is the next line of resistance, with very high resistance at 126.60 in case the Bank of Japan intervenes to weaken the yen. Yeah. Pound yen also relatively stable, did find some support, moving a bit higher with this weakness of the yen, which could be temporary if we get more bad news, but could be strong if we get, of course, if we get an intervention by the Bank of Japan. Anyway, 154 is support, 155.75 is resistance. Okay. And oil prices, as aforementioned, mixed news over there, currently on the move to the upside, trying to recapture 45. We already got very close to 47 last week. Anyway, and we found support right here. I would say this is a better approximation, 43.25 in WTI crude oil after the inventory data earlier this week. Okay, so I think we covered all the usual stuff. Maybe let's talk about the dollar index that you mentioned, Luca, beforehand. So yeah, 93.35 is the current level. We plunged all the way just under 92 before bouncing back up. So we have a gradual slide in the dollar index. Remember, the dollar index is mostly the US dollar against the euro. So anyway, we fell from the glory of late in 2015 and early in 2016, gradual fall, but it's not really a one-way street on the US dollar index. Comment here from Ed: refugees will flock to Italy now since High Court concluded if you're hungry and need immediate nourishment, you can steal. Yeah. I forgot, had long New Zealand dollar 68.50, 69. What do you think long term for the Kiwi dollar? I think we'll have well, New Zealand economy is doing okay, but it's yeah, so but the RBNs will not like to see much higher levels, so we could see an attempt to break above 70.50, but I don't think it'll go that far because the RBNZ could intervene. They could cut rates following the Australian RBA, so I think we could have it fall. I mean, I think any upside is limited on the Kiwi dollar. Question from Horace: what do you think about dollar CAD? Well, also there in Canada, the central bank is not happy with the strengthening of the Canadian dollar, which is going on for over 3 months. We almost reached 147. Now we're back down. Now we are seeing some kind of reversal, which goes hand in hand with the reversal in the US dollar. I see more weakening of the Canadian dollar. I think the price of oil is a bit exaggerated, even though we have a fall in production in the US. There's still an oversupply in the world of oil. In addition, the Bank of Canada could act. They don't want to, but if the Canadian dollar stays too strong for them, it could weigh on the economy. The Canadian economy did recover thanks to a weak Canadian dollar, and they would like to keep it that way. So they might cut rates or hint about cutting rates in order to achieve that. So yeah. Question here from Jake. Before just the Canadian dollar, next levels to watch: 129.30, 130, and 130.80 on the top side. On the downside, 128.30, 127.50, which is a strong line, and we already dipped our feet under 125, so 124 would be the next level. Question from Jake about pound CAD. Let's look at that. I think the bigger driver here is the British pound at the moment. So far it's been more, looks like the picture of dollar CAD, because we've seen this big fall, and now we're seeing it rise once again, which looks a bit like pound CAD, but I think that for the next 6 weeks, we could we can expect a bit more stability from the Canadian dollar and a bit more crazy moves from the pound regarding the referendum. So we could see a resumption of the fall in pound CAD. Let's talk about levels here. These levels, which I drew some time ago, are not that relevant anymore. But let's take a look at so one level we can see here, 182.60 recent support, but lower support awaits at right here at 180.70 or 180.80. Okay. And resistance, this line is not that relevant anymore. I would lower it right here. So close to current levels at 187, okay, is resistance. And further resistance, of course, no, not of course, but right here, 190, 150 or so. Of course, the round number of 190 is also significant. My bias is for a fall of the pound and some stability in the Canadian dollar. I mean, in comparison to the pound. So I think that what we're seeing now is a correction, and that we could see a resumption of the downside on this currency pair coming. At least the pound could be under pressure in the next 6 weeks. And assuming we do not have a vote for Brexit, we could see then later on a big rebound. So the current move in the past few days, I see it as a correction, not as a change of trend. Okay. In the meantime, euro dollar remains pressured. Okay, any more questions? What factors would strengthen the US dollar? We have seen a small upward bounce. Well, I think what we've seen with the US dollar this week is just a necessary correction of the downtrend. Talked early in the week that the move was a bit exaggerated. The sell-off of the US dollar against the yen can be explained by the lack of action from the Bank of Japan, but it went a bit too far. I mean, we were above 121 not that long ago, and now we reached the 105 handle. Same goes for euro dollar. The problems of Europe are not solved. Political uncertainty in too many countries, very mediocre growth, and political crisis. Well, anyway, the ECB is still pumping money. Okay, they're not keen on adding even more stimulus soon, but they did do already so much. They keep on printing money, so the move all the way to above 116 was exaggerated. Same goes for other currencies, especially the pound, with all the uncertainty about the Brexit. The resurgence of the pound seemed a bit wild. So this was a necessary correction. But the US dollar, the US economy is still growing, but at a very mediocre pace. I think that in June we'll get some answers. First of all, we'll have new forecasts from the Fed. Press conference is accompanying the next Fed decision, new forecasts. In addition, we'll have the vote in the UK, so we'll have a bit more certainty about the next direction of the dollar. In general, I do see the US Federal Reserve continuing its path of raising rates, and we can see a stronger dollar once the dust settles, once things become a bit more clear regarding the Brexit, and once we have new forecasts. So I expect a bit more dollar pressure until the middle of June, the end of June, and then perhaps it can rise. But anything can happen. The Fed is data dependent. Political events, I think, will take more center stage, not only the Brexit, but also opinion polls regarding the US general elections in November. So again, Clinton continuation is what markets want to see. Or until a few months ago, it was also other sort of mainstream Republican candidates, and the Donald disruption is what they don't want to see. So that's if we have Donald Trump continuing his tricks, managing to gain ground against Clinton, I think we could have more worried markets and another strengthening of the yen. perhaps even return of the euro to its safe haven position, and the dollar weakening. Yeah, perhaps not against commodity currencies. We could see a more risk off. If we have more polls like we know now of Clinton winning, then it could be each currency to its own, less demand for safe havens, and a higher chance of a rate hike in December. Yeah, of course, again, data is also important. We've seen yesterday that despite all the political news, the biggest impact came from data. ADP sent the US dollar lower, and the ISM manufacturing PMI sent it higher. This is the first week of the month. We have the non-farm payrolls. Again, for tomorrow, for the NFP, watch out for all indicators moving together. We need strong jobs, strong wages for a stronger dollar, and weak jobs, weak wages for a weaker dollar. If things come out mixed, and they did come out mixed quite a few times this year, then we can see a big mess. Okay. Anyway, I expect to again answer your question. More pressure on the US dollar towards the middle of June, and then perhaps things could improve, but it's never sort of, that's the big picture. The charts go wild. In November, yeah, okay. More questions? Maybe we'll recap the events for the week and talk about the events still coming up before we get to the wrap up. So this week we had ISM manufacturing PMI on Monday. Manufacturing sector still looks weak, and that hurt the dollar a bit. Draghi continued his battle with the with governments, nothing related to monetary policy. The Australian RBA, Glenn Stevens, decided to cut interest rates that hurt the Australian dollar. Chinese PMI also missed. The new governor of the RBA is Philip Lowe. We learned that this morning. Let's see if Lowe with an E takes the Australian dollar to new lows. Yesterday was a busy day. We had ADP non-farm payrolls, missed expectations, but non-manufacturing PMI, the services sector looking good. Today is a relatively quiet day. It doesn't mean uneventful. I think the pound could move. But tomorrow, the focus is already on tomorrow on the non-farm payrolls in the United States and the Canadian jobs report. More comments here. Sounds like I should wait for the ADP report before any further trading. ADP report is already out yesterday. I think you meant maybe the NFP tomorrow, the non-farm payrolls. Lucas says if they let June go, they'll have to wait until December. Yeah, I certainly agree, because we have a rate decision also in July. No press conference, no new forecasts. And even though they say every meeting is a live meeting, we know that in practice, they make the big decisions only when they do have a press conference. In September, it's just too close to the elections. And the Fed takes any opportunity not to raise rates. So they think they'll do it in September. In November, of course, it's on the week of the elections or a few days before. So I don't see, and there's no press conference anyway. So December, I think there is, and also according to bond markets, I think there's a good chance for us seeing a rate hike in December. Yeah. More developments I mentioned today. There's some political trouble in Turkey as well. The Prime Minister is set to resign. He has an issue with President Erdogan. Markets don't like it. The Turkish lira is selling off. So far, it seems like a Turkish event, but you never know with emerging markets. Things could also become a domino. So just something to watch out for. Another comment here, they'll use the Brexit as the next excuse for the hike in June. Yeah, actually, they already said that. I think it was Kaplan, but maybe other Fed officials already mentioned the Brexit as a risk for the global economy. And we know that the Fed decision is 1 week before the Brexit referendum, the EU referendum in the UK. So, yeah, they already use it as an excuse. Okay, I mean, for a rate hike in June, we would need to see excellent data now, excellent data and non-farm payrolls report at the beginning of June, an upwards revision of GDP growth at the end of May. We would need basically everything to look great. Okay, and also maybe opinion polls to show clear victory for the Remain camp. They don't think anything will be really clear until we have the actual results. Okay, so it's time for the wrap up for today. This is the wrap up for May 5th. It's a Thursday. It's perhaps calm between the storms today. Okay, the mood is, well, relatively mixed, but the US dollar remains solid. The better data trumped the worse data. Okay, so it's the ISM non-manufacturing guide, the services sector report, which looks good, looks promising for the US economy, beating the ADP non-farm payrolls, which missed expectations with 156. Other figures were also relatively positive in the United States. Again, not a wonderful picture, but all in all, things look relatively positive. They support a stronger US dollar. Another thing we have a clear Trump is the presumptive Donald Trump, presumptive Republican candidate going to meet Clinton in the presidential race. It's a very clear choice for Americans between Clinton continuation, the devil you know, perhaps, against disruption Donald, and I think which means uncertainty. And I think politics are going to take more bigger center stage. Yeah, other figures we had yesterday. Australian data came out better than expected, and it actually helped the Australian dollar. And we learned that Philip Lowe will be the next governor of the RBA from September. And that's good for Australia because he's a veteran member of the Reserve Bank of Australia, so it's no changes over there. Before we talk about the charts, events for today, services PMI in the UK, remember, big moves, but short-lived. It's the most important sector in the UK. And we're expecting more of the same, but we had negative surprises from other UK PMIs, so I will not be surprised to see a disappointment. Remember, it's also a survey, it's a forward-looking event, so it could be it could reflect the uncertainty around the Brexit. It could be negative. At 12:30 GMT, jobless claims, as usual, shouldn't have a big impact this time. And James Bullard, the optimistic hawk in the Fed, talks. If he's negative, which is unlikely, we can expect perhaps a poor NFP report tomorrow, but he's usually optimistic. And we have some RBA data at 1:30, this quarterly report. Looking at the chart, we're seeing a slightly stronger US dollar once again. Euro dollar between 114.60 and 115, leaning down. Pound dollar between, well, hugging 145, 145.80, resistance 144.40, support, waiting for that services PMI. Dollar yen, the US dollar is stronger also against the Japanese yen, with the pair settling above 107. 107.65 is the next line of resistance. Dollar CAD, the Canadian dollar, is weaker. Mixed oil and weak trade balance in Canada. 127.50 is strong support. 129.30 is the next line of resistance. Aussie dollar did have a nice recovery on the data, but not going anywhere fast. 74.40 is support. 75.30 is resistance. And the Kiwi dollar stable around 69.50 and 70.50, the double top, are lines of resistance. 68.20 is support. Okay, so I guess that wraps it up for today. It's a day of tension before the non-farm payrolls. Okay, after we had all the important US data out, and basically the big political news of the week out, with a presumptive race between Clinton and Trump. And tomorrow we have the big release of the non-farm payrolls, also the release of the Canadian jobs report. So I'm expecting, unless we have exciting news today, we might have a calm before the storm, time to analyze charts perhaps, and to get ready for the big event tomorrow. But you never know which news is going to come out from anywhere in the world. And as I mentioned, we had this political development in Turkey. We don't know. And also in Brazil, the impeachment proceedings are going on. And, negative news from emerging markets can impact markets as well. Okay, so I guess that's it for today. Wish everybody safe and successful day at the markets, and we'll see you tomorrow. So thank you and bye-bye.